Mr. Sorenson, thank you again for appearing on Bloomberg Television, and congratulations on the announcements there in Malaysia. Can you give me a sense now as we approach 2018, what does the property pipeline look for Marriott International in Asia? I see a couple of more products in Malaysia, also in Niseko in Japan. Where are your priorities in 2018?
Well, thank you. It's great to be with you. It's great to be in Kuala Lumpur. We were here today to sign essentially a four-pack of new deals with YTL, one of our long partners in Malaysia and really throughout Asia Pacific, including two hotels in Kuala Lumpur, a new JW Marriott, be the second JW Marriott in KL, and an Edition hotel in KL as well. And then we signed preliminary agreements for a W hotel and an Edition hotel in Niseko, Japan. Obviously a great ski destination, one of the great mountains in all of Asia Pacific, really all of the world. In a broader context, we have, as we're here, about 600 hotels open across Asia Pacific. We have about 500 in the pipeline. So the pipeline is deals that have been signed and are definitive. They're not all under construction, but they're all heading towards construction. So the growth is almost doubling between what we have open and what's in the pipeline.
What's your assessment of the global economy right now from your perch, and how does that translate to what you want to do in Asia as well, of course, as you change the mix a bit from the Starwood transaction last year? You are removing some rooms at Sheraton properties around the world, in particular in the United States. What does the mix look like going forward in Asia?
Well, it's going to be a very interesting year ahead of us. You've a couple of questions in there. One is, what does the economy feel like around the world? Asia is performing very well. Obviously, it's a big market, and each country is not identical. But take our third quarter numbers, for example, which ended at the end of September. We saw same-store sales. In our industry, we talk about RevPAR, which is revenue per available room, but it essentially means year-over-year performance of our rate and occupancy. We were up about 8%, and in absolute terms, that is tremendous year-over-year growth. It reflects growing demand and some pricing power. On the basis of commerce, the economies are generally performing well, and obviously that drives business travel, but also the growing middle class and growth in leisure travel. And probably the biggest story there is the continued increase year over year of outbound Chinese travel to other markets in Southeast Asia and around the world. You look around the rest of the world, I think you see Europe performing actually quite well.
In Asia, sir?
In Asia, correct, in Q3. Yep, and I suspect we'll
continue to see. Because in the United States, I think you're talking about 1 to 2%, right?
In the United States, it's fairly anemic growth. We've talked about 0 to 2 for 2018. And we've obviously got some supply growth in the United States, but essentially what we see is the U.S. economy growing maybe a bit better than it has in the last 12 months, but continuing to be sort of in the 2 to 3% GDP growth range. Nothing extraordinarily exciting. Obviously, the markets are telling us that they're a bit more optimistic. I hope the markets are right, because if that optimism shows ultimately higher GDP growth, that will show up in better RevPAR numbers than what we're anticipating.
Yeah, the stock market's obviously been doing very, very well. Marriott International up again overnight, I believe, to a record high, up some 55% year to date. Is there a bubble forming in U.S. stocks?
Well, I don't know about that. I think if you've got a couple of things that are driving it. One is some optimism that GDP is going to grow more aggressively than it has in the last year or two. Think about that as GDP going from a roughly 2% level to a roughly 3% level. Again, from our perch, we would say we haven't seen definitive proof of that yet, but the market could be accurate. The second is obviously more focused on tax reform. I think there is increasing optimism that Congress and the administration will get something done on tax reform, and at least a hope that that will drive increased investment and increased economic growth in the United States, and of course almost certainly will drive increased profitability for Marriott, but for all other taxpayers in the United States.
We just got news as well that the Trump travel ban has at least temporarily been reinstated. What impact does that have on your business?
Well, we are competing in some respects in a global travel dynamic. So when you look at 2017 and global enplanements, international trips all around the world, what we see is that the number of international trips is continuing to grow. We think by 3 or 4% year over year, while the arrivals of international travelers to the United States is down a bit in 2017. What that tells you is the United States is losing share to other destinations around the world. The travel ban classically is not necessarily the only driver of that, but I do think it feeds a bit of a narrative in the rest of the world, which is the United States is maybe a little bit less welcoming today than it's been the last few years.